Hi everyone, welcome to the video series on government securities market in India. As you are aware, this is a very broad topic, so we will be covering this topic or multiple video sessions. The agenda for today is to give you a basic outline regarding the government securities market in India. Now, if you see over the years, the government securities market in India has emerged as one of the most vibrant segments of the Indian financial system. Talking about the sheer size of G-Sec market in India, it is currently the third largest government debt market in Asia. Now, over the years, the G-Sec markets have evolved from being a borrowing instrument to a key part in RBI's monetary policy transmission. So, RBI's monetary policy sets the trajectory for inflation and growth of a country, and G-Sec markets play a very important role in that. We will see how all these are happening in the G-Sec market. But now let's start from the basics. Let us start from discussing what a government security is. Simply put, government security is nothing but an acknowledgement of government's debt obligation. It is a tradable instrument, and more than often we refer to government securities as risk-free securities. This is because of the sovereign nature of the instrument, and in India, either the central government or the state government can issue the government securities. Now, a better method to classify the government securities will be based on their maturity. So we can simply divide them into two buckets. One is the short-term instruments and second one is the longer-term instruments. Short-term instruments have a maturity less than 1 year, while the long-term instruments have maturity greater than 1 year. To give you some examples of short-term instruments, we have T-bills. And there are other short-term instruments like cash management bills and all, but these are all various formats of T-bills and all, and carry the same property of T-bills only. Now, coming to an example of long-term government security, it is the government bonds or the any dated security issued by the government. Now, coming to the various means for borrowing of central government and state government. Central government has an array of government securities to do market borrowing, ranging from T-bills, cash management bills, and bonds. But state governments depend mainly on the dated securities or bonds. The bonds issued by the state governments are also known as state development loans. Now coming to the regulators of the G-Sec market in India, usually the money market and the G-Sec market is regulated by Reserve Bank of India. Meanwhile, the corporate bond market is regulated by SEBI. The major players in the G-Sec market in India are the banks. There is limited retail participation in the G-Sec markets in India, but it is improving. Apart from banks, we can see mutual funds, insurance companies, pension houses being the other major players in this market. So that's for today's discussion. Going forward, we will see each and every instrument in this market in detail. What are their properties and what are the other regulatory measures in this market, and how the G-Sec market play an important role in the RBI's monetary policy transmission. So please stay tuned. Thank you for watching today's video.